Yeah, one of the things that I keep thinking about though is, and it goes round and round in my mind, is that do we have an issue that people will constantly think they're too late? And how do we get past that issue? That's probably the more important question, because when Michael Saylor made his big bet, I think he paid on average around $11,500 for his first $450 million. And then he bought that extra 600 million or 650, and I think that was at around 18,000, maybe averaged over 20, I can't remember. And I kept thinking, the people will see he did it at 11, then see he did it at 20, now we're at 30 or 35, we get to 40, 50. Does that become a problem for people because they keep thinking they've missed out? Is that a conversation you're having with the investors you talk to?
No, because the investors don't look at it in those terms. Price is irrelevant. Okay. That's a retail obsession, right? Penny stocks, they're cheaper. For institutions, it is, what is the adoption, what is the regulation, what is the market cap? So the more it goes up, the more the market cap makes it available for them to purchase. So that is a much bigger deal than price. So price is a function of that growing market cap. But if you're BlackRock, you would not have looked at it until it got to this, near $1 trillion market cap. And that's the thing. So it's not about price, because what they're looking for, nobody thinks when they buy, let's say, the S&P 500 for a portfolio, for a larger portfolio. They're not thinking, how much is it going to go up? Is it too high at this price? They think, what's the portfolio diversification effects? Does it help add accretive value? How does it perform over the cycle, meaning numerous cycles? All of those things is what they actually look for, because they're looking for portfolio returns. This is an issue with the space, because the space still thinks of it in retail terms. So I think that structural change, again, Michael Saylor and the corporate treasurers don't think of it in price terms. They think of it, what does it do to the balance sheet of my corporation to offset other issues that I have with currency balances and treasury ownings and bond ownings and stuff like that. And so that's not a price conversation as such. Obviously price is important, but it's more overall.
That's kind of interesting, that market cap point. So do you believe there's potentially a wall of money that comes in when Bitcoin does breach the 1 trillion market cap?
Yes, I think that's what we're seeing, is front running the size of the market cap. Because at 1 trillion it becomes a serious asset. At 10 trillion, it's gold in terms of asset size. So that deepens and makes a broader market and allows more participants into it. So if you think of the more conservative pension funds, well, they can't take it seriously because they still think they have career risk. But when it's a $10 trillion asset, it's not going to get regulated to zero, because $10 trillion is owned by individuals and pension plans and corporations and everything. So it's these kind of things that actually drive them.
So what kind of things are holding people back at the moment in the conversations that you're having?
Time. I spoke to... So it just takes some time to onboard. So the conversations I get from family offices and institutions, I spoke to a big conservative asset management firm. I spoke to their Hong Kong office, and they're thinking through Bitcoin. And so I've given them the asset allocation paper that we got at Real Vision. We commissioned at Real Vision. I said, well, here's that. I said, that's exactly what we need. Now, can you present to this group? So I presented to that group, and then it's like, can you now present to the senior managers? Present to the senior managers. Then they need to write it all up. Then, if they say, yes, we're going to do it, how? Okay, now, we can start with futures, which is what BlackRock are doing. Because if it's cash-settled futures, I don't need to worry about the bearer asset element. So that works. But after that, when they want to own Bitcoin, they need to get an entirely back office infrastructure. How do you price it? Nobody has consistent pricing. What time does it close and open? Where all of the things that they need just for their risk models aren't normal. So all of this needs to be built out. And you need to get approval from trustees. So this shit can take 2 months to get to buying futures. It can take 9 months to get to actually buying Bitcoin and custodying it with somebody.
Wow. That's kind of really interesting. I guess
Peter,
that's really interesting.
If you think about it, right, you're in charge of your mum's pension plan and everybody like her. What you then have to do is justify that it's safe and it's secured properly and you've done all your due diligence, and that's a lot of work, because it can't be, yeah, look, trust me, it's not Michael Saylor, you don't own the company basically or have all the voting rights. You have to appease millions of policyholders, so you've got a massive legal liability, so you have to do all the work.
Yeah, no, it makes sense, but also it kind of makes sense in another way, in that the wall of money didn't happen straight after Michael Saylor, but we're now starting to see it trickle through. Like every week, or we hear of another company and another company. Yeah, that side of it's really interesting. Another thing that I was told is interesting, I don't understand the detail, you probably will, but somebody said to me, one of the most significant purchases of Bitcoin over the last few months was MassMutual, being an insurance firm. Have you looked much into that, and have you observed that as being slightly different from other treasuries?
Yeah, super important. I think that was NYDIG as well, by the way. That is very important, because who owns massive treasury-style cash balances and long-term liabilities is insurance companies and assurance companies. This is exactly the kind of asset that they need. It's almost perfect for them, because they have these long-term cash flows and they sit on tons of bonds, tons of different currency exposures, and they need to model out the risks of that. And Bitcoin actually works really well. There's not many instruments in the kind of money market side of things that looks anything like this, because bonds, you're going to get no real capital appreciation, you don't get any interest. So how do you manage a massive pool of cash? And Bitcoin becomes really interesting for them. So that's just a start. Once we start to see more of those, I think the whole insurance industry is going to start putting this on their balance sheet. It makes total sense.
The same person about MassMutual also said to me, the thing is about the Bitcoin on their balance sheet, it would likely be the last thing they would ever sell.
Most insurance companies don't sell stuff. What they do is they build a portfolio and then draw down as necessary. And so that would be just a weighted amount. So again, people really misunderstand what people do here. An insurance company manages a big pool of assets, and then you make a claim because you crashed your car, let's say. Okay, so it comes out of the pool. So they're not going to go, oh, well, Peter's crashed his car, shall I sell my German bunds? They have an asset allocation. So what they do is just release some of the cash, and they have cash buffers for that. I don't think that changes a lot. It's going to be the guy who runs the asset allocator, the CIO, making the decisions of, do we tweak our Bitcoin position by 15 basis points and reduce our German bunds by 10 basis points, regardless of all the claims being made or whatever it may be, if it's life insurance or anything else. So again, it doesn't work in that way.